Okay, folks, welcome to the Contrarian Trader and this week's member stock pick analysis. This is where we review the stock symbols that our members are interested in, and they ask me to review the charts on video. And if you get any value out of this video and you want to get these videos in the future, please enter your email address if you're watching this on the website, or if you watch this on YouTube, subscribe to my channel. If you watch this on Twitter or StockTwits, please follow me on those networks. Okay, so let's get to the charts. Okay, first stock up is for fellow member Ron. He's looking at Hero, and this is one that we've been following for quite some time. You could see how we broke down below this very shallow, very short uptrend line, and now we're bottoming at $3.60. Let's go to a weekly chart first. Where I was really interested in the stock the most was right back here when we were in this downtrend and we bottomed out at 421. That had acted as support prior and resistance prior. What was resistance is now support. And it rallied, hit the 200 period moving average and collapsed. It's a breakout point failure. Broke right back down through support and has continued down, retesting this new lower band of the declining downtrend line. So on a weekly basis, it looks as if it's trying to find a bottom, no doubt about it, as noted by this week's wick or bottoming tail and last week's bottoming tail. Now back to the daily chart. I like the fact that we have several days of support at $3.60. I wouldn't be a bit opposed to a long trade, a swing trade on Hero, but you have to keep a stop loss just under $3.60. I would also expect some resistance at $3.80 and real serious resistance at $4 per share. Any rally into that $4 per share level, I would probably be looking to book profits. Next stock up is for fellow member David, Molly Corp, very volatile stock. This is a daily chart. Let's begin with a weekly chart. I always believe in multi-period charting to see where we've been historically. Is there historic support or historic resistance? And with Molly Corp, there is no historic support. And we recently bottomed out at an all-time low of $1.61. We were in a tight descending pennant formation, and this week we have broken out above that upper band of the declining downtrend line. The question is, will we close the week out there? And the way that the micro caps and the Russell 2000 have behaved of late, I have my concerns. So it's a bit too early in the week to be saying, okay, the weekly chart shows a breakout, especially where this has shown or proven itself to be resistance several weeks in a row now. So the weekly chart, while looking optimistic at the close on Tuesday, still has until Friday to prove that it's got some rocket fuel to remain above this declining downtrend line. Let's go back to the daily chart. All right, so on a daily chart, we rallied off of 161 up to 229. We had resistance, no shock there. Sellers came in, they want their money back, and they drove it back down once again. The positive news here is that we put in a higher low, prior low 161, new low 181. This stock has a lot of shorts in it, so I wouldn't be a bit surprised to see a rally higher. So what I would do if I wanted to swing trade this, and it's really not one that I'm interested in, a little bit too high risk for me. If I was going to trade it, I would use a stop loss order just below, say, $2.06 on a closing basis, and I would get out. If we rally, I would expect resistance right here at 239 and then at your 50-day moving average, and I'd be looking to book my profits into that rally. Higher low on RSI, but the real critical chart here is the weekly chart. Will this breakout hold? Will it consolidate? And will we see a continuation breakout? That I would be interested in seeing. Perhaps we'll revisit this one at the end of the week. Next stock up is for David as well. PRAN, the symbol, Prana Biotechnology. Interesting chart. This is a daily chart. We had a nice little rally off the May bottom. We've pulled back into a descending pennant formation. Nice reversal off the lower band. The question is, do we rally and close above this upper band? So I would be interested in on a breakout and a close above this upper band. There's something that I call the 3-day rule. My members are aware of that. The 3-day rule would have to be in effect, and then I would be interested in trading the stock. I like the double bottom setup on Ultimate Oscillator. So Prana is interesting on a daily basis, weekly basis. Not much to really speak about here. It's obviously been hit hard. We had a dead cat bounce off of 147, now pulling back. So far this week, as of Tuesday, after the close, we have a bottoming tail. Will that bottoming tail hold? Not quite sure. We'll know on Friday. Next stock up is for fellow member Paul. RNN, Rexhan Pharmaceuticals. This is one we've gone over before in the past. The first thing that jumps out at me is that you have the 50-day moving average threatening to take out the 200-day moving average. So that does concern me. This is not a stock that remains at extreme oversold levels as it was back here. So this now becomes an issue for me. That being said, I like the higher low on RSI. It's trending upwards. If you're going to trade this stock, you need to use a stop loss just below 70 cents per share, which is acted as support, because if we break down and close below that support level, we're probably going to take out 65 cents, and ideally you'll want to wait until that 50-day crosses below the 200-day moving average. Ultimate Oscillator is looking good, showing some strength, higher lows, very similar to what you're seeing on RSI. Same thing on your slow Stokes. So the oscillators look good. Same thing here in Williams percentage R. So you have a possible candidate for a swing trade. Just beware the 50 period crossing over the 200 period. My only caveat. 30-minute chart. I had to look at this one on RNN. Key reversal at the close. Caution flag is on the track. I don't like key reversals, bearish key reversals, so please be careful of this one on Wednesday morning. Next stock up for Paul is MTU, Mitsubishi Financial Group. Paul, this one I'm going to have to say avoid right now. I think that we're going to come back down. We're going to fill the gap right here, and we'll see whether or not this support level holds. If we close below the support level, we're coming down to, say, 580, 579, where you saw support back here, where you saw support back here, back here, back here, and it failed here. So just be careful. I don't like today's candlestick. Very, very concerning. You had a nice pop higher on Monday, Tuesday, and we're seeing this a lot lately. You get these one-day pops, no follow-through, which is why I've been booking profits on most of my swing trades really, really quickly and moving to the sidelines. Weekly chart of Mitsubishi Financial, a clear downtrend, making lower highs, never good. We have a topping tail so far this week. Again, I would wait for that pullback to the support level. Watch, wait. Will we see bottoming tails? Or will we break down? If we break down, of course, you'll want to avoid. Facebook. This is for fellow member Kate. Kate, I think what's going to happen here on Facebook, I'm a big fan of Facebook. I love the stock. I love the product. I think, however, we're going to pull back. We're going to fill this gap. On a filling of that gap, assuming that the market is holding in, it's not melting down, I would possibly be a buyer of Facebook. I would want to see some bottoming tails, because I do believe that Facebook is going to 100 within the next year, year and a half. So I like Facebook. I wouldn't mind having a piece of it myself. I am concerned about what Yellen is saying about the social media stocks. Will that cause a tightening of margin requirements on the high beta names like Twitter? Will that impact Facebook? Not quite sure. It may. So just be forewarned, be careful of these names if you're going to use margin. Now, Twitter, after the close today, came out and they beat on earnings. The street liked what they had to say, and they proceeded higher. I'm not quite sure where they're trading now. I've been busy producing this video, but they were higher earlier. So that may bode well for Facebook. I would not buy that rally. I would wait for a filling of this gap. I think it's going to happen. I would just show a little bit of patience. Okay, next stock up is for fellow member Karen. She's interested in Sandridge Energy, symbol SD. This is a weekly chart. Again, what we like to do here at the Contrarian Trader is multi-period charting. We want to identify where our friends are, where there's support. And we're not quite at the support level that I would deem to be the ideal support level, which is at, say, $6 per share to $5.90, thereabouts. Now, we are attempting to hold on to the 50-period moving average, but the week is young. We have flashed a bottoming tail so far this week. Will it hold? Not quite sure. We'll know on Friday. Let's go to the daily chart. All right, so on Monday, we flashed a bottoming tail off the lower band of the declining downtrend channel. I think before I got involved with this one, Karen, I would want to see another pullback to the support level, and ideally a pullback to this support level here, $6 per share. Why is that? It's because you saw in the trade today, although we closed up, we saw resistance or topping tail at $6.30. So to open up a trade tomorrow on Sandridge, what's your max profit? We're already struggling at the day's highs at $6.30. We're going to struggle to get through the 200-period moving average, even if we make it up that high. I think that the risk to reward is not in your favor. I think that using a weekly chart is far more advantageous for this trade. So that's what I would do. I would use your weekly chart, note the bottoming tails seen back in early 2014, also in 2012, how it acted as resistance in 2013, how it pulled back, retested, acted as support, and then took off. So this is a good support level, and that's where I'd buy in. I would avoid it right now. Can they come in tomorrow and squeeze the shorts? Sure they can. But that doesn't make me necessarily wrong, because it's too high of a risk to reward. And that's my big concern here. We want to get in at the best risk to reward entry point, and I think that $6 per share is the one for you. Next stock up is for James, CREG, China Recycling Energy Corp. Okay, this is a micro cap, and I have to caveat everything I say about these micro caps, especially a Chinese micro cap. They're hated right now. They're out of favor. The small caps are out of favor. They're getting hammered, and I don't like topping tails. You have one here, here, here. Every time this stock goes to make a move, I don't know whether it's pump and dumper sending out emails or what have you, but there are sellers above, and I don't like sellers above. It bothers me. So when I see these topping tails, it usually means a bad thing. And in fact, you saw Monday's topping tail resulted in a down day today. So a daily chart I do not like. This Stoke RSI would have had me optimistic here. Nice consolidation. I think the horses left the barn on this one. Out of curiosity, let's take a look at our weekly chart. Yeah, the horses left the barn here. And I'll tell you why, James. You have 175, and this is the value of using multi-period charting. 175 has acted as support and resistance here back in 2013 on a couple of occasions. Back in 2012, it acted as resistance, couldn't close above it, pulled all the way down to a low of 78 cents per share. So I would not be a buyer of CREG. If it pulled back to 150, held, flashing bottoming tails, maybe, and I would allow it to rally up to 175 and then get out as soon as it hit 175 and keep a stop loss just below 150, because if it closes below 150, your next support level is way down at 125. So you're going to really need to obey a strict discipline of a stop loss order. And again, micro caps are out of favor, and I do not like Chinese companies. So please just be careful. Next stock up is for fellow member Fernando, VTMB. This was our 2014 penny stock pick, and we made a bunch of money twice on this. Right here out of the gates in 2014. It was a really great stock. We did very, very well. So you can see it's pulled back. I was warning back here that the rally in the micro caps was over, avoid beta, and it's just been taken to the woodshed. So Fernando, you could see that so far this week we have a big topping tail. I wouldn't be a buyer of VTMB until we pulled back and retested the support level. It's acted as support back in April, January, resistance in October, and support in September. So it's got a good history of being a support level. I would stop out on a close below the support level and move to the sidelines. Again, I have to keep caveating this, folks. I don't want people to get hurt. Micro caps are out of favor. All right, so just please be careful. Okay, next stock up is for fellow member Fernando as well. Symbol CTCM. This is a daily chart, Fernando, and right off the bat, the first thing that strikes me is today's topping tail and the fact that we broke down below key support. It was support back here, resistance here, then acted as support. Very strong support, confirmed support. It failed. So just by virtue of the fact that we've broken down below the support level, I have to say avoid until we come back down to the next support level of $9.50. If we happen to rally and close above the support level, then the 3-day rule would be in effect, and we'll see whether or not we can capitalize on that strength and move higher. And it's proven to be good support level in the past. Back here it acted as resistance, and back here. It's been a proven resistance level and a proven support level. Now it's acting as resistance, so I would avoid this right now until we pull down to a good support level or we break out and it passes the 3-day muster. And who you're fighting with here are those folks who bought here and want their money back. It's all about psychology. Whenever I enter a trade, I always ask what's my edge over other traders. I don't see one here, and I would have to say avoid. Okay, next stock up is for fellow member Jesus. Jesus is interested in Quicksilver, KWK, the symbol. Let's begin with a weekly chart because that's really the most important. We bounced off of the lower band of the declining downtrend channel on Monday, and then we saw a short squeeze on the stock, going back now to the daily chart. Now, this support level was last seen back in September. It consolidated nicely back at that time and then took off for a great rally. There's really no prior period between the time it acted as resistance, broke out, pulled back, retested it, that this support level has acted as a level where there have been buyers to support the stock. So I think that what we saw today was a short covering rally off of that lower band of the declining downtrend channel. The question is, will you get a continuation move higher? I don't see the rush to get involved with this one yet. Let's go to a 30-minute chart. And here you have it. We were in a parabolic downtrend. RSI below 15. Traders knew it was hugging the lower band of the declining downtrend channel on a weekly chart. They do know. They watch. High beta names with huge short interest, trading below $5. This is the bread and butter of day traders. Volatile, low dollar names with high short interest. So they squeezed it. It pulled back, held 188, rallied higher, and note the topping tail into the close at resistance at 195. So I would not be a buyer into this resistance level. I would want to wait for a pullback and a retest at 181. Can this stock take off on Wednesday and make me look foolish? Absolutely. There's no doubt about it. I cannot control short squeezes. But the one thing I can control is my risk. And I'm concerned about taking on too much risk into a support level. Note how 195 was resistance back in September. And we pulled back on several occasions to retest the 181, 183 support level. We have the same scenario setting up here. So again, I don't see the rush here. Even with the high short interest, I would allow it to consolidate it, allow it to come to us, and trust me, I will be watching. And if we do get an opportunity to buy into this one, we will do it. So I hope that helps, Jesus. And that doesn't mean to say that I don't like some things on the daily chart. I like the higher low on Stoch RSI. The stochastics, you have a double bottom setup, a little cup with handle formation going on here. Higher lows on Williams percentage R and slightly higher low on RSI. So it's not all bad. I'm just worried about the risk to reward entry point. The high was at resistance and we're very close to it. I would wait for a pullback. And again, it could spike higher tomorrow morning on a short squeeze. And again, it could spike higher tomorrow, go up $1 a share, and I could look foolish, but I have to stick with the discipline. And the discipline is, what's my edge over other traders besides knowing there's a big short squeeze potential here? I don't have one. With the exception of the fact I have knowledge of the psychology of the stock and traders, and that it'll probably come back down and test 181 once again, then I would be a buyer. Next stock up is for Jesus as well. Born, B-O-R-N, China New Boring Corp. Daily chart looks really, really sweet. Nice little pennant action going on here. Hammer formation, a bullish hammer formation seen today. Higher lows on RSI. Breaking out on ultimate oscillator. So we have an oscillator potentially leading price performance. Double bottom setup and a breakout on stochastics. So the daily chart looks really good. Weekly chart, you have resistance at $3 per share. Where do we close? $2.83. So if you're going to buy this stock, I would expect, as a matter of fact, let me draw a trend line here. Okay, here you have it. So it's amazing what trend lines will do. So here you have a triangle formation. We are right at the upper band of the declining downtrend channel on a weekly basis, and the stock looks poised to rally. Oscillators are looking super. ADX at overbought levels. Higher low on stochastic. RSI, ultimate oscillator, breaking out on a weekly basis. Week's not over yet. I have to always say that. It's only Tuesday. So this one looks really good. I like BORN. Next stock up is for Kevin. GG Gold Corp. Our gold mining stocks are doing very, very well. GG is looking pretty good. We are putting in higher lows. Nice little rally of late. We're in a trading range which has failed once, breakout point failure twice here, 3 times. So we have a little bit of negative history here. So I would just be careful using the stop loss order just below these recent lows, these bottoming tails. And if you wanted to buy on a breakout here, I would look for a breakout. I would employ the 3-day rule, because had you followed it here, you wouldn't have gotten burned. You would have avoided a big, big sell-off. So that's the rule I would have employed. Actually, a 3-week rule. This is a weekly chart. So weekly chart is looking pretty impressive, poised for a potential breakout. Let's go to the daily chart. All right, daily chart, Friday, great action. Monday, great action. Here you have your resistance, your sellers, and as you can see back here in September, and they're still there. So while I wouldn't add right now, I would watch. I would watch for either a pullback to 27.50 or 27, or a breakout and a close above $29 per share, or 28.75 thereabouts. 3-day rule. This is a daily chart. 3-day rule is in effect, and then I would add. And today's volume was quite light. Good double bottom setup here on stochastics. So GG is looking interesting. I don't think there's any rush to get involved with it yet. Again, allow it to pull back, break out, 3-day rule, and then get involved with it. Okay, next stock up is for fellow member Kevin as well, GameStop. This is a classic case of when markets send you signals. There are times where I get burned by obeying my own rules because I didn't make enough money, like with Cliff, and I'll go to that one in a moment. But as you can see here on Monday, flashed a topping tail where you've seen resistance before, here, note the topping tail on this candlestick, and resistance here. Me, were I long this move higher and saw this topping action, I probably would have booked my profits and moved to the sidelines, because all too often you see price action like this the following day. Not always a collapse, but a down day in the beginning of a downward move or a pullback, and your profits are put at risk. So I prefer to avoid that. Now, the flip side, And what would I do with the stock? Kevin, I would avoid it. I don't see trade here at all right now. Now, in the case of Cliffs Natural Resources, where we booked profits, we opened this trade up on Friday. We booked over 3,000 in profits in less than 2 trading days. From here to here, well, I missed out on this move higher, this short squeeze higher, and my members ribbed the heck out of me today, which is fine. It's all good. They made more money than I did, and I love that. That's fantastic. However, when I see a topping tail at the close, man, I'm the first one out. So sometimes you don't make and you regret not making as much as you could have. However, far more times than not, I save money. I book my profits, and I'm happy that I obeyed my discipline. Next stock up is for fellow member Henry, Bank of America. This stock looks terrible. Bank of America looks horrible. Head and shoulders set up, left shoulder, head, right shoulder. I would avoid Bank of America right now. Here's your neckline at 15.13. You break down below there. We're going considerably lower. We're going to put a 14 handle on this stock. My guess is that we had a down day on yields. Sure enough. Here's the 10-year Treasury yield. And the yield keeps breaking down, getting weaker. That is not good for the banks. So, Henry, right now, I would avoid the banks in general as long as we continue to see this yield declining. I think that there is a trade to be had here. I'm not sure whether the decline in the yield is due to the weak U.S. economy, or is it because you have so much fear money rotating into bonds because of the geopolitical risks that it's driving yields down. I'm not quite sure yet. So until we see some support come in on yield, I would avoid the banks because they need a rising interest rate environment to expand their margins. So avoid Bank of America right now. And that's it, folks. If you gained any value out of these videos and you're not a member, please enter your email address. If you watch us on the website, we hate spam too. We will not spam. If you watch us on YouTube, subscribe to my channel, that button to the bottom left. And if you watch us on StockTwits or Twitter, please follow me on those networks. Have a profitable trading day, folks. Remember, FOMC rate decision tomorrow being Wednesday. Be careful. And I'll talk to you soon.